Hey, 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 Instagram. I'm going to wait because it looks like Instagram is telling everybody that I am about to go live. So I do have a guest, and I'm going to go ahead and invite her in. Let me see. We are waiting for my guest, and she is going to be joining us. Let's see. All right. Yes. Hey, Keisha. How are you?
Hello.
I am
How
doing
are
good.
you? I'm good. I'm
Thank you
good.
so much for joining us. I know we had a little slow start, you guys, but we are in the house. Thank you so much, Kanisha, for joining me today on this Thursday. By the way, where are you at, Kanisha?
I am
Oh
located
my
in
goodness. So
Dallas,
then I
Texas.
heard that it is a little bit, it is snowing there. I just hung out with somebody in Dallas, Texas. I heard that you guys are cold. Well, it's
Yeah.
cold all over the place, so they say in
Yeah.
the US. We are about to get some weather that we are not accustomed to. I'm here in California, and I know our cold is a little
Mhm.
different from everybody else's, but it's still a little chilly here. So
Yeah.
welcome, welcome. Listen, guys, let me go ahead and officially introduce myself. For those of you who are joining us, please make sure you share this live. Make sure you share it. Make sure you invite a friend. The more, the merrier. Because we are going to be talking about S corporations today. All things S corporations. You know, it's that thing that everybody has been jumping on the bandwagon recently, but we want to make sure that before you decide to jump on the bandwagon, you know everything that you are supposed to. So, hey, Jaden, how you doing? And as a matter of fact, we're going to address some questions that I have been seeing coming into some of these groups. So listen, I am Dr. Cozette M. White, America's #1 tax and accounting strategist. I work with 6 and 7 figure CEOs to help them understand where their business is going, implement those key performance indicators, those metrics that allow business owners to grow. If we don't know what we are doing, if we're not looking at our numbers, then how do we actually expect to grow? How do we expect for our bottom line to double, increase without actually looking at numbers? I help those business owners understand what is a profit and loss statement. Where am I truly leaving money on the table? And how can I do things a little different so that I don't owe Uncle Sam, so that I am writing off things, I am putting the money away for my retirement? That is exactly what we do. If you guys are joining us for the first time, I'm just introducing myself. Go ahead and share this live. Make sure you give us some love. Make sure you give us some hearts. I also work with tax professionals, EAs, CPAs to help them grow, scale, and leverage in their firm. All right. Help them with the resources, tools, continuing education hours, as well as looking at ways to help them grow, scale, and leverage. What about their messaging? What about their marketing? What about their mindset? What's going up here that is preventing them from growing, preventing them from investing in a coach? All right. So that is just a little bit about what I do. I'm going to go ahead as you guys are joining in. Kanisha, why don't you tell them all about what you do? And by the way, you guys, if you didn't understand, I'm in California. Okay, I'm in California. Go ahead, Kanisha.
Yeah, absolutely. So I'm Kanisha Coleman. I'm known as the Beauty CPA. My handle on Instagram is at the Beauty CPA. I own Coleman Tax, which is an accounting firm that provides tax and accounting services exclusively to beauty entrepreneurs, where our mission and our goal is to help you maximize profit while keeping that tax bill as low as legally
You guys heard the
possible.
key word. She said legally. It's also legally and ethically. Because look, you can write off a lot if you know what
Yeah.
you're doing, or if you are going to the right professional that is going to help you legally and ethically write off expenses according to the Internal Revenue Service. So if you are just jumping in,
Mhm.
give me a one in the heart. Give me a one in the heart. Give me a heart in the group if you are an S Corp. If you are an S Corp, just put a 1 in the thread there. If you just don't know what formation you are, what type of business structure you are, just put a 2 in the chat. And let me just run this down for you. There are different structures out there. We have our sole proprietors, in which the IRS does not actually look at you as truly a business owner, but you can still write off your expenses as well as include that income. We have a limited liability corporation, which is a jurisdiction or an entity that is designed based upon the state that you are residing in. We have what we call an S corporation, which means you have to elect to become an S corporation. And when you elect to become an S corporation, the Internal Revenue Service allows certain, I'm going to say, deductions, income. You're looked at a lot different. You've graduated into what I call the big boys league. And then we have our C corporation. But you do have to elect to become an S corporation, and that's on the federal side and not the state side. The state still looks at you as a limited liability corporation. So let's go ahead and let's jump into this conversation. Let me see who is an S Corp. Did y'all list down here? We got some ones. We got a few ones. A solo esthetician. Okay. So let's talk about, what does it look like to be an S Corp, Kanisha? How does one even become an S Corp? And what is an S Corp?
Yeah, absolutely. Well, like you said, the S Corp it's a tax selection. It's a tax selection versus an entity structure, right? It'll be like, let's say you are an LLC, maybe a single member LLC with 1 owner, or a multi-member LLC with 2 owners, or let's say you even skip the whole LLC route and just went right corporate. You can then file paperwork with the IRS, and you're telling the IRS, hey, tax me as an S corporation, okay? But what I want to say to that is, even before you do any of that, I'm gonna need y'all to run some numbers, okay? Because then I like proving all of our decisions with information. Because what I find is,
there you
folks
go.
are doing this too early.
Right. They don't know. They listen to the other folks out there on Instagram.
They're
They
doing
listen
this
to the
prematurely.
folks on TikTok with all they dancing and stuff saying become an S Corp. But y'all need to put the brakes on and listen here.
Yeah. They're doing this a little bit too early, okay? So what I mean by that step I just talked about, as far as, filing the paperwork, that may be step 1. I need y'all at step 0, and that's the running of the numbers. I want you to run your net profit, run the numbers against the net profit, as well as what you would need to pay yourself as
you said run the numbers, the net profit. Can you tell them what that means? Because I'm sure that somebody on here doesn't know what the net profit. They just think, oh, I got some sales in, that's my money. But what's the net profit for our people out there?
Absolutely. So in a nutshell, net profit is, okay, so you got all the money you're making. That's your revenue. Revenue or income, all the money in. That's the money you're making. Then, of course, your business got bills, y'all. All right? So you got to subtract all of those expenses, money out. So to pay for the expenses it takes to run your business, whatever is left over, that bottom line, that is your net profit.
That bottom line, that's what we're talking about. That number that you guys like to decrease and not pay the IRS taxes on, that line. That number you pile on all those expenses, that line right there.
Yep, absolutely. So when you have that bottom line number, that net profit number, I want you to analyze or run the numbers on that, in addition to what you should be paying yourself, your reasonable compensation or your reasonable wage, okay? That is like a big requirement of being an S corporation owner, is you to pay yourself a reasonable wage. Mind you, this is not determined by you. You can't go pick it out the air and just say, oh, I feel good about this number. You can't do that, right? It needs to be backed by some Department of Labor, some wage data research, right? That says this is what you should be paying yourself according to, obviously, where you live and the services that you provide to the business, okay? And then you need to run the numbers on that. And then you need to compare, am I saving taxes as I am or as an S Corp? And that's how that decision should be made, okay? The consequence, the fear, the warning I want to give to everybody watching now and on the replay is that if you convert to S Corporation too soon, right? You, one, won't realize any tax savings if you're paying yourself reasonably. If you are experiencing tax savings and you're not paying yourself reasonably, you're putting yourself at risk if you're ever audited by the IRS. They frown upon that, okay? Cozette, I don't know if you know this about me, but I was 8 years IRS audit, IRS agent. 8 years IRS agent. So I ran this issue. I did this issue a lot. I audited a lot.
Did y'all just hear that?
But even besides
she ran the issue. She worked for the Internal Revenue Service. So she's not just the CPA, but she's telling you some inside information firsthand. Okay, she did this. So don't just think you can become that S Corp and not even process your payroll. Listen, guys, don't end up in trouble.
Yeah.
Go ahead.
Yeah. Y'all want to do that. Then I think that even besides tax though, the consequence of converting too soon is now you have all these other responsibilities of an S Corp. S Corp, like Cozette said earlier, S Corp is in the big leagues. It ain't no, it's in the big leagues. So I got some requirements. We want to make sure that, first off, it's more expensive from accounting and the tax perspective, right? If you're outsourcing this to someone, it's more of an investment because it is a more complex entity. Also, you have to make sure you're not piercing the corporate veil, okay? Now, what that means is we got to make sure we're keeping our things separate. Business over here, personal over here. We can't be intermingling money.
Yes.
We can't be doing that.
Yeah.
We can't be intermingling money. We got to keep everything separate, okay? As an S Corp, you got to have regular, board meetings. Even, let me tell you something. You got to document and keep it in your records, even if it's just you. Even if it's just you, okay? And there's so many just other regulatory things you got to keep up with. So with that being said, that's why we tend to err away from converting too soon. We got to make sure we can meet our responsibilities and save.
So let me ask you a question, because the thing that I commonly see out here on Instagram, TikTok, any social media platform is switch over. It's going to save you money. Let's tell them, what's the difference when we talk about saving money on the tax side? What are we saving? Are we saving our self-employment taxes? I don't know. Can you share with the people, what are we actually saving?
Yeah, absolutely. We're saving on self-employment tax. Okay, guys, let's be clear. State income tax, federal income tax on the personal side will stay the same. Okay, that's there. What you're saving is the self-employment tax. Okay, so remember, when you are a single member LLC or a sole proprietorship, you are paying that whole 15.3%, right? You're paying state income tax. If you're in a taxing state, you're paying federal income tax, and then you got this extra little layer of federal payroll tax on top of that, right? When you convert to an S corporation, you are going to be paying, you will be on payroll, of course, and then you'll be getting the withholding on that 7.65, just half of that, right? The other portion of your net profit, it comes to you free of self-employment tax. Okay. So that's what we're saving. And and mind you, once you make the conversion and your net profit continues to grow, right? So will the tax savings.
So you guys, what we're basically saying is, before you make that decision, talk to a professional that knows what he or she is doing. Let's get away from listening to what we hear on social media all the time. Reach out to an expert, have a consultation, ask for a discovery session to determine if this is the best solution for you. Just because the company down the street said that they are an S Corp, that doesn't mean that you are even ready to convert, to elect for an S corporation. So if one decides, I think I'm ready, I've run my numbers, Kanisha, when is the best time for someone to elect to submit their paperwork, and how do they go about submitting the paperwork? Do they submit it to the state, or do they submit it to the IRS? Who do they submit the paperwork to?
Absolutely. So when you're ready, remember every tax year, right? Every tax year, the deadline to timely elect S corporation status is March 15th. Okay. That is the deadline every single tax year. And you would do that by completing Form 2553. That's the IRS form. You can go right to their website, get the latest version. That's what you submit. That's what you complete that. You sign that off. Mind you, I'm going to keep this in mind. People trip up on this. That form needs a wet signature. I mean, you got to print that out. You got to put that ink to paper. And you got to scan that back in. You can't DocuSign it because IRS will throw that back to you, okay? So that is the form that you need to complete to tell the IRS, hey, treat me, I want you to be taxed as an S corporation for this tax year. Now, if that passes, there is some late relief possibilities.
Let's talk about them.
Okay.
Give them the rundown,
there
because
is.
that's a frequent question. Like, I want to be an S corp. I forgot to turn in my paperwork. Well, I've heard that I could turn it in late and they'll still accept it. So have that conversation, like what's late and what are some of the exceptions. Remember, guys, no rule, nothing that we say is set in stone. Every situation is a little different depending on the agent that gets it. You just heard her say moments ago she was an IRS revenue agent. So it may come into her hands one day, or could have, and she said yes. The next day it came into somebody else's hand and they said no. So nothing is set in stone, but here are some reasonableness, some reasonable reasons why the IRS may decide to accept it if it's late.
Yeah. All right. So the IRS, it grants a lot of relief. Okay. I know folks be scared of the IRS, but I feel like as me being a former employee, it's just made up people just like you and me, right? So it yeah. So it's a lot of relief out there that the IRS have for folks. They understand that it literally could have been just an oversight, like literally just an oversight. That's one of the exceptions when you show that there was like a reasonable cause, right? And obviously March 15th falls right in the middle of the regular tax season, right? And so with you being focused on that, yes, it's very easy to forget about the 2023 year, okay? So just reasonable, a reasonable, what do they call it? They call it like a reasonable exception on the form when you read it, but that's one of them. Just, hey, we tried, we forgot, but reasonable cause. That's what it's called, reasonable cause. Okay. Secondly, any like hardship, like if you experience like just something traumatic that happened in the business or on the personal side, that is also a reason, a late election reason. If you were depending on your paid preparer to do it, like let's say you have a CPA or a firm on your team and you just thought they took care of it, you know what I mean? You just went on your Mosley way. That is also a reason. You thought they did it, you know? And you could totally say that on the form. Just throw it right under the bus if you have to.
Right.
They
and it
totally
can also
get
be
it.
natural causes.
Yeah.
Maybe there was a fire,
Absolutely.
earthquake, you know, some of those things that could also prevented you from sending in that documentation. But I so agree with you. Like so many taxpayers feel as though the IRS is just this mean, evil, you know, company, you know, government. Certain things, yes, but for the most part, I totally agree with you. Like they are human, they are people, they are just employees on the other side reading the documentation that's in black and white. Yes, we can. No, we can't follow this, but they do allow some, you know, bandwidth, you guys, so to speak. So just ask. Yep. Believe it or not, they probably will go ahead and accept that late documentation. Now, if you send it in, you know, October, November time frame, then it's going to fall for the next year more than likely. Every situation is different. No two situations are the same. So that's what I love about it. The other day in one of my groups, I was tagged, and the question was, or I wasn't really tagged, but it was a question. My CPA is recommending that I switch from an S corporation to a C corp, and it was solely, well, I won't say solely, but the driver was the annual revenue. So let's have that conversation. At what point in time do you think that it is beneficial? Let's give the pros and the cons for a corporation or organization to go from C Corp, from S Corp to C Corp.
Yeah, absolutely. I love this question, by the way. I love this question because a lot of folks think they get to S Corp and that's it. Like, no, it's a whole nother entity. It's a whole nother entity. And so I love this question because it talks about the entity structure journey. This is what I'm going to say to that, okay? The C Corp tax rate right now is at an all-time low, right? Since at least I've been alive, I've never known it to be 21%, okay? Because of that, remember what we said, you save taxes on self-employment tax with the S Corp, okay? But remember, that S Corporation, that net income still flows to you to the 1040, okay? It's a flow-through entity, so it still flows to you. If all that money gets to your 1040 and that rate turns out to be 27, 32, 34, that's higher than the C Corp over here of 21. So that is my biggest reason for recommending to convert. And it comes down to that entity analysis that we start the conversation with. You got to do the analysis across the board, across all entities. Because like I said, just remember this, guys. If you're looking at, when you do your taxes, you should always see a marginal and an effective tax rate. If you look at those rates and they are higher than 21 over here on the C Corp side, run them numbers, run those numbers, because you may have some possibility to save more on taxes there now. And I say that very generally, right? Like I said, each of you have different individual circumstances and maybe some other moving parts to that. And so it has to be done very individualistically. Don't get off this live and go do nothing crazy, okay? Get with your professional and run the numbers. But one reason why maybe you wouldn't do it, one reason why you wouldn't do it is if you are still planning to pull money out of that company, okay? Because that is one thing with the C Corp. If you need to pull money out beyond your reasonable wage, it has to come out as a dividend, and you'll be taxed at the dividend tax rate for that, okay? So that's the one thing I would see, like from a tax perspective, why you have be a little bit anxious in doing that, because then you'll be double taxed on that C Corp net profit. But if you're good with your reasonable wage, you ain't pulling nothing out. And so you may be fine and you can save on tax that way, okay? And some other advantages of the C Corp is that, and these are non-tax, but like if you are ever growing and expanding and you're looking to bring other partners or investors, it's just so easy to sell off shares of that stock, of ownership in that C Corp to all different types of entities. The S Corp will limit the amount and the type, okay? So those are some of the advantages of a C Corp.
Those are all excellent explanations. And so think about it, you guys, and it just goes back to run the numbers again. Run the numbers is what it's all about, and look at where you stand. And again, if you can't run the numbers, as I said already, make sure you seek out a professional that can assist you in running the numbers and provide you with the pros and the cons, okay? It's always two-sided. It's a great side and a bad side, or pros and cons. So I want to go back to a question that I have here. Ms. Gilliam, she says, I have an LLC. Did you guys discuss LLCs? The conversation today is all about our S corporations, but we would love to answer your question. What specific question do you have, Ms. Gilliam, about your LLC? And we'll be more than happy to address it. If you guys have questions, now's the time to drop your questions in. We are talking specifically about S Corps, but if you have a question, a tax question, if you have a question as it relates to the business structure, your sole proprietor, your limited liability corporation, your S corporation, your corporation, feel free to ask the question now while you have us here. We do these every week, and this is your opportunity to ask those questions. And by the way, let me just reintroduce myself. For those of you who are hopping on, my name is Dr. Cozette White, America's #1 tax and accounting strategist. Today, we are talking about all things S corporations. It is called Thriving Conversations for a reason. We want you guys to come on here, ask us questions. Every week, I will be interviewing and having conversations with our CPAs, our enrolled agents, our tax professionals. It is our season. We want to educate, empower you guys, and we want to eliminate all these fines, these audits that we see going on, and they can be eliminated. But look, y'all got to inspect what you expect. Ask questions to the right people, okay? Ask questions to the right professionals, all right? And sometimes that means you got to pay a little bit to get the answers, you guys. You got to pay a little bit. If you are a business owner, look at it as an investment. Look at it as it is a deduction. I'm able to write these off on my taxes, okay? That's what it's about. So let me see. Okay, so you didn't have anything specific. All right, well, we see you, Miss Gilliam. We see you, girl. I just wanted to learn. Okay, so that's what we're talking about, the S Corp. And if you missed it, Ms. Gilliam, make sure you go back and watch the replay, because we did touch on how do you elect to go from an limited liability corporation to an S Corp. We talked about the due dates. We talked about the form. We also talked about looking at the numbers. That is the most critical piece, if nothing else. If you guys didn't walk away, how do you evaluate if you should take that leap into graduating up there with the big boys, the big girls, okay? Because once you graduate, there are some stipulations before, you know, if you want to go backwards. Can you go backwards? How can you go backwards? And let's share that with him. Kanisha, go ahead and share that. What happens if they want to go back? Or what happens if they're not really abiding by the guidelines? The IRS does have sanctions.
Yeah, absolutely. Absolutely. So if you want, I'll talk first to, you know, if you want to, let's say you convert to S Corp and you realize, you know what, I might have did this too soon, or maybe just the situation changed and you're not experiencing the tax savings you wanted, yet you're paying for being an S Corp. You can revoke, and you can terminate an S Corp election. You can do that. Now, there's a consequence to that, because once you do it, you can't re-elect for 5 years, okay? You cannot re-elect for 5 years. So you got to think long and hard about, you know, whether you want to become an S Corp in the first place and the decision whether to terminate or not. If it's something that is like a one-off bad, you're like, for example, this happened with COVID, right? Folks were S corporations, and all of a sudden their net profit plummeted. The couple years of the pandemic, right? And they still had to maintain that S Corp. I wouldn't have advised to terminate, because then it would have just ruined them for the next 5 years. Sure enough, right when the pandemic was over, they recovered even better than 2019, and that S Corp saved them a ton of money. So it's not a decision that you want to take lightly, the revoking of that status, but know that you can, and if you do, you're barred for like 5
and that's
years.
why we say it's important, you all, for tax planning. Tax planning is not so much just at the end of the year. When you do some planning, it's strategic, and it's like a navigation. How am I going to get from point A to B to C? You know, I was on a call just this week, and a young lady was under the thought process of, oh, let me hurry up and open up an LLC so that I can write off these expenses that I incurred. You can't just write off expenses. You have to have some type of income, you guys. Otherwise, that's a hobby. It's just a fancy hobby. Now, in her particular case, she really did start a business, but she started it late in the year. So she has what we call startup cost. And talk to your professional about how you can write those startup costs off. What's the limitations? How much can you amortize? And what's the length that you can amortize if you exceed the threshold? Okay, so tax planning, talk with your professional, ask questions, not too late in the ball game. The best thing that I can really suggest to all of you that are on this live, be proactive And once you even think about the idea, sit with someone that can help navigate, give you the pros and cons and say yes or no, don't do it. Okay. So let me see if there are any other questions. If you guys have questions, go ahead and drop them in the thread here. We will go ahead and answer them. Today we were talking all things S Corporation. Kanisha gave us some input on when we can file, what are the requirements for filing, what form we file, the due dates, what if we miss the deadline, what are some of the reasonable costs, questions or responses we can put on the application. You know, we talked a lot. So we didn't jump into anything about expenses. That could be for another conversation on another day. But we are on the tippy toe of tax season. We are days away before January 1st. We're in tax season. The professionals, we're into tax season. But for you all, and for the IRS, the true date kicks off January 1st. We have not been informed of the actual date that the Internal Revenue Service is opening. At least I don't think so. But as you know, it's later in January. And so just make sure that you are accumulating all your documents as they come in. Put them in a safe place, a file folder, so that all the mail that comes in, you're dropping it in one centralized location. If you're getting documents via email, save them in a folder. If you're working with your professional virtually, start accumulating things so that you can send it to him or her electronically. Okay. Set your appointments, ask all the questions, do what you need to start. Just, complete your client tax organizer. If your person doesn't give you that, then ask for it. That'll help you jot your brain as to what you need to actually bring into the office. Anything else? I know I'm leaving out something. What am I leaving out, Kanisha, for them?
You know what I didn't speak about? I don't think I touched on like the filing requirements. For all of my new S Corporation owners out there, anybody wanting to be, y'all know the S Corporation is a whole different separate tax return. It's a whole separate tax return. When you convert to be an S Corporation, you're gonna file your tax return on form 1120S. That's the federal form, okay? Form 1120S, okay? And that tax return is actually due 1 month before your 1040. It's due March 15th of every year, okay? So not only do you have to file 1120S, you have to file that in addition to the 1040 that you're already used to.
Why do they need to file it a month before? Is there something that goes into the 1040?
Absolutely. So the 1120S, that will be the main form that will report all your business's revenue and all the expenses, right? And then that bottom line number, right? That profit, that will get put on, it's called a Schedule K1. Okay, that's a part of the 1120S, Schedule K1. And then you will use that form to file with your 1040. That information is going to end up on Schedule E, page 2 of Schedule E of the Form 1040, and then all that goes combined to the IRS. So that's what I mean.
You said something, and I want that to resonate for some of my colleagues. Did you hear the form that she said that the K1 goes on? Because some of y'all get it screwed, and then we have to fix it up. It goes on Schedule E. Okay, you guys, it doesn't go on any other form. Please get it right. Thank you so much for saying that.
Yeah, absolutely. No, absolutely. And I wanted to make sure I mentioned that because again, that's an additional cost they got to be prepared for. And 1120S, that ain't no cheap tax return. I'm tell you this. It's not a cheap tax return. So it really truly is an investment. It truly is an investment, but that decision, once it is made and properly implemented, it will save you so much money in tax.
Right. So she just hit on two things. Not only when you elect to become a limited liability corporation, you have to pay the annual registration depending on the state in which you registered, but you are also filing an additional tax return. If you are an LLC in California, we have an additional return. But if you convert to an S corporation or you elect, you're filing an additional tax return all in itself. It's due a total different date. That means you need to have great records. If you haven't gotten your books reconciled, you don't have that year-to-date profit and loss, you are all over the place, now's the time. Don't scatter when it comes March 1st. I don't have things together. Yes, you can file an extension, but listen, when we file an extension, there's this misconception, oh, I don't have to file, I don't have to pay. No, when you get an extension, you're only asking the Internal Revenue Service to extend you time to submit your tax return. If you owe, then they want their money on the deadline, March 15th, April 15th, May 15th. If you owe that money at that time. When you are late, penalties and interest begin to calculate on the due date, right up. If it's March 15th, penalties and interest begin to calculate the next day. And if you are an S Corp, guess what? Penalties accrue depending on the number of members in the S Corporation. Okay? So the money starts to rack up. And if you wait from March 15th until September 15th, and it's multiple partners in that S Corporation, y'all gonna owe a whole bunch in back taxes. And it's not even taxes, it's penalties and fees, plus the interest.
Yeah.
So when we say you stepping into a whole nother ball game, you really, really are. Okay. So talk to a professional before you say, oh, my cousin did it. Here's why she did it. Think about it. Okay. Seriously, because that's what you guys do out here. You make decisions based upon what your friends are doing. Or what the people across the street. I saw she had assisted living and she's doing well. So I thought I'd start one. You don't even know what she's going through. So listen, guys, hopefully we were able to provide you with some information that will make you say, let me put the brakes on, let me think about it, let me talk to a professional. Hopefully, we provided you with some things that allows you to say, let me ask a little further, let me dig a little deeper before I decide if I want to become an S Corp. Or yes, S Corp, I'm ready for it. I've already played around with the numbers. I know that this is for me. Let me seek some advice for the next steps. All right. So Kenesha, where can they find you at? Because if they like me, they might have a hard time finding you. So Kenesha's going to tell you guys where she can find you. Because even though we had this interview, I could not find Kenesha. So where can they find you?
Yeah. No, for sure. So my handle here on Instagram is @thebeautycpa. And then we got our website, thebeautycpa.com, right? So you can just go there. You can see a lot of our videos, information, as well as how to book call with us. Or again, I'm very active on Instagram @thebeautycpa.
All right, so you guys heard it. So listen up. You guys can follow me on all social media platforms @Cozette M. White. But before we go, I just want to remind you guys of Thrive Live. Thrive Live is a conference designed for our EAs, our CPAs, our tax professionals, financial advisors. It is going down here in Los Angeles, California, May 11th through the 13th. All the information, the link is in the thread above. But we're going to spend day one talking all about our mindset and strategies. Day two, we're talking about our messaging, our messaging and our, why did I draw a blank? Our messaging, profitability, pricing, all of that. We're talking about making sure that we are talking to our ideal client, our category of one. And of course, on day three, we are going to focus on implementation and scaling of our automation, our systems, and our A team. All right, it's all for those of you, you're stuck. You're stuck and you're wondering, what do I do next? How come I cannot get this revenue to grow? I know I was once in a place where no matter what I did, season after season, even though I did the numbers, I ran my numbers. Even though I ran my numbers, I was still stuck. I was growing, but not at the rate in which I wanted to. And it was not until I raised my hand, asked for help, got a coach who could seriously help me drive and navigate to the point in which I wanted. And then my business began to change. So Thrive Live, make sure you guys check out the link, May 11th through the 13th. And here's the thing that I love most. I have bonus in what I call intensives every single month leading up to the event. So you guys don't have to wait until May to get to see me, to get all the juicy training that you're going to get. I'm hosting a training every single month leading up to the event. The first one kicks off December 29th. All you got to do to click the link to get all the information. We right now are in our pre-sale mode. Tickets go to regular price January 1st. So what better way than to give yourself a gift? All you got to do is click the link in the bio to find out all the information about Thrive Live Experience, May 11th through the 13th. And for my CPAs, my enrolled agents, and my tax professionals, we have a VIP day, day 0, where you have the opportunity to earn up to 12 continuing education hours with the Internal Revenue Service. We are a continuing education provider, the school here, and so you will have an opportunity to earn some hours. All right, so thank you, Kanisha. You gave some juicy information. If you're catching it on the replay, hit hashtag replay. Both Kanisha and I will be watching this to come back and answer any questions that you guys have. In the meantime, have a very Merry Christmas, and thank you guys so much.
Thank you.